believe that as a successful real estate investor and business owner, you need to have a legacy plan. What are you going to do with the wealth that you're going to accumulate that's going to come from real estate or that's going to come from your small business? So, we love to do this all of the time, and you can trust us as one of your team members so you can spend more time and more money in your business. We're going to be looking at the wealth building plan. We go through 8 stages. One of the main things that makes us stand out from other CPA firms is that we go through structuring and formation. This is very, very important for real estate investors and small business owners, because if you don't have the right entity structure, you're going to hurt really badly when it comes to asset protection and then also the amount of taxes that you're paying out. So while a lot of people feel like they need to go to a lawyer to get the entity structuring done, we do this in-house for our clients because we take a look at the tax aspect, the entity structuring aspect, the asset protection aspect, and the compliance aspect of entity structuring. And once we come up with the entity structure, we can actually get the business registered for you and set up your books. And as well as we do business analysis meetings, that's when we take a strategic look at your business to see where your business is going. The goal of every business is to make money. And so one of the things that we look at during the business analysis meeting, are you set up to generate the revenue and the profits that you need to have a long-term business? And then we look at investment property purchasing, and then we do retirement planning and year-end tax planning. So these are the stages that we go through with our clients. Like I said, we provide an integrated approach to wealth building. So tonight we're going to be looking at, having a legacy planning versus estate planning. So I'll go ahead and hand this over to Marcella right now, and then I'll join you guys later. Go ahead, Marcella, take it away.
Again, thank you, Adair. I really appreciate you having me on the call. And again, your wealth building approach is so important, and I hope everyone really is taking everything that you're saying there into account as far as the holistic approach to building wealth. As we talk tonight about wealth building secrets, and we discuss legacy planning, it is a wealth building secret and what I call a wealth preservation secret, because many times it is not discussed in mainstream America. So, again, what you're able to bring to individuals through these calls, there I commend you, because you are getting information through these monthly webinars that you are not going to get with just any CPA. So I'm going to get started in talking about legacy planning. And for many times, and I talk to most individuals, they've heard of estate planning and they're familiar somewhat with the estate planning process. But legacy planning, what is that? Well, I'll start off with discussing the differences between legacy planning and estate planning. And really the key difference between legacy planning and estate planning is the benefit you receive from the process. Oftentimes, conventional estate planning is viewed as what takes place when you die. And we have documents, we have financial statements, we have assets, we have other tools that distribute wealth at death. But yes, that's important. But in legacy planning, we have tools that you will participate in that will add to the quality of your life while you're here. Legacy planning allows you to experience the moments of joy, gratitude, selflessness, and giving back. It involves taking action while you're here and experiencing those actions in the lives of your family and in your community. And it will involve planning for what happens at death, but it will not focus solely on that. As a result, it will become a very rewarding experience for the members of your family that you choose to bring into the planning process. Next, we'll talk about the legacy objective. And really in this brief presentation tonight, we will review how you can move from a plan of default to a plan by design, or we'll discuss the 4 pillars of legacy planning, and then the next steps needed to start unfolding your legacy during your life.
All right, Marcella, you can go ahead. I think the slides will catch up with us. Just go ahead.
Okay, no problem. All right, we'll like I said, we'll just move forward, and the slides will catch up, and you'll see where I am. First, let's touch on the plan by default. And really, when it comes to estate plans, which is involved in the legacy planning process, there are only two plans available, a plan by design and a plan by default. So you'll have to find out and ask yourself, which one do you have? When you pass away, wealth only goes three places. It goes to charity, it goes to the government, and then to your heirs. If you pass away tomorrow, you have to ask yourself, what does yours do? Do you know? These are important questions to determine. Many people think that the number one failure of successful estate planning is estate taxes. But in actuality, that's not correct. The number one cause of failure in a successful estate plan or legacy plan is procrastination. We have every intention of getting things done and moving forward and putting a plan in place, but we continue to put it off until sometimes it's just too late. So please do not procrastinate. You want to create a legacy plan that will be long-lasting for generations to come. So we help you reaffirm the values and passions that have been significant in your life by using a values and life experience worksheet, a discovery process to evaluate the 4 areas of wealth in your life, and a roadmap for implementation of your legacy plan. So let's take a look at the 4 pillars of successful legacy planning. And it starts with understanding your values and the life lessons. Now, this can include ethics and morality. What are your standards for behavior? Why are these important to you? Examining faith and religion. What do you believe and how do you come by those beliefs? Your customs and traditions. What family routines or rituals have been important and enjoyable over the years? And then the memories and stories. What are the past experiences worth retelling over the years? This pillar is important because it really represents the essence of who you are and how you will be remembered, and the things that are important to you and how they will be passed on and remembered for generations. The next pillar for successful legacy planning is your instructions and wishes to be fulfilled. For example, taking care of loved ones, ensuring that someone finishes their education, and instructions for funeral arrangements. And many times we know this is not topics we really want to discuss. No one really wants to be faced with their own mortality. But through the process of legacy planning, we help you to get through it in a very uplifting manner, making it enjoyable and fulfilling for all those involved. The next pillar, the third pillar for a successful legacy plan, are personal possessions and your emotions, those things of emotional value. So items that carry emotional or sentimental value regardless of financial value. And many times there may be little to no value. Those things like dad's baseball glove, mom's cookie plate, family rocking chair, the famous family recipe that's been passed down to generations. These things are also very important. And again, a very important part of the legacy plan. Why? Because the lack of planning in this area oftentimes leaves families at odds. And I've seen it where not having these plans in place leaves people just not in a good place, especially when they're going through a grieving process. And the final pillar for legacy planning are financial assets and real estate. And again, we can all agree that taking care of financial matters is very important. Savings and investing, residence and other real estate, and other possessions that have significant economic value. Making sure that you have things on paper, having things in place, proper documentation for these areas are crucial, a very crucial part of the legacy planning process. Again, we spend a lot of our time building wealth and accumulating all of these type of financial wealth, emotional, these significant things of emotional value, and the other areas that we're trying to accomplish. But without putting the plans in place to preserve it, we are really working hard for nothing. So we have to make sure that we're doing everything we need to do on the front end, but we're doing everything we need to do on the back end as well. So when to start? Well, when we engage in the legacy planning process, first of all forms of wealth directed into the lives of the people and organizations you care about the most. It is never too early or too late to start the legacy planning process. Just think about yourself and your own family for a moment. Do you have a parent or parents who are still alive? If anything was to happen to them tomorrow, do you know exactly what you need to do? The thing is, this lack of communication before someone passes oftentimes, again, leads to disorder in the family. So all actions we take in legacy planning, including non-action, have consequences in the lives of the people we care about the most. So in taking the steps for responsible transition for your wealth, we define how to preserve your wealth and share it with others. We engage the wealth strategy team that we have here with the Wealth CPA, complete the plan for gifting, create the appropriate containers of wealth, and define all tax liabilities, reduce and possibly eliminate taxes associated with wealth transition. And oftentimes I come across people and they'll say, oh, estate planning, yeah, I've done that. But you have to look at it as this. Is estate or legacy planning a one-time event, or is it a process that involves over years? I encourage you to think of it as a process that never ends. I mean, life changes, circumstances change. This gives us an opportunity to update your planning. Oftentimes with there'll be multiple tax changes going on. There'll be changes in the family or in the family dynamics. So as a result, we'll continue to take further action, and the plan will continue to make things better. It's really a process that will bring you fulfillment, continued gratitude, better understanding, and most of all, peace of mind. So I encourage you tonight to start planning for your living legacy. Ask yourself this question. If you were to die tomorrow, how will you be remembered? How will others remember you? Will the answer be the same? If not, then what do you need to do about it? Keep in mind that a properly structured legacy plan is a mirror of your life plan. So get started today. Thank you, Robert, for having me.
Thank you so much, Marcella. This has been very, very informative, and it's very important because, usually we are on the beginning side of wealth building, which is helping clients to accumulate, and keep their wealth. But at the end of the day, it also boils down to making sure that after we've created the wealth, after we've built the wealth, that we're able to preserve the wealth and pass it on to the next generation. So I think this is very, very crucial because in all the conversations that we're going to be having and usually that we have at the Wealth Building CPA, we want to make sure that everything that we do, that there's an integrated approach to wealth building, that we're not just looking at just one aspect of wealth building and then neglect another aspect. We want to make sure that we're looking at the ultimate wealth building plan. Ultimate in the sense that it covers all aspects of wealth building. The wealth building program is a 12-month training program that we take you step by step through the steps that are required to run efficient real estate business. And for those that are not involved in real estate and you just have a small business, this also applies. Part of the reason why I had Marcella on the call tonight is because it's very important that you begin with the end in mind. If for those of you that have read the book, 7 Habits of Highly Effective People by Steve Covey, one of the main things that he talked about is begin with the end in mind. If you know the reason why you're doing this, then you can go back and from the start, do things right. So it's very important that while we're thinking about our wealth building plan, we know that the ultimate goal is the ultimate end of wealth building is legacy planning, being able to leave enough, one, for yourself while you're here, and two, for your loved ones, when you do move on. And so, our program focuses on specific elements of the wealth building system. We're not, like I keep saying, we're not a traditional CPA firm that's just here January through April, and then you don't hear from us for the rest of the year. No, we're here 12 months year round, because each month there's something that we want to focus on. There's something that we want to work with you on. And this evening, specifically one of the things that we want to talk about is tax planning and preparation. Everybody is in the throes of getting their documents ready to get their taxes prepared. And that's when we look, this is what we do during stage 2. We take a look at your prior 3 years of tax returns and look out for any inaccuracies, any inconsistencies, any audit flags, any overlooked deductions. I cannot tell you how many times we've had clients send us 3 years worth of tax returns to review, and we always find deductions that have been wasted, items that have been claimed on the return that could trigger an audit, things that are inconsistent that could make the IRS stop questioning whether or not this is a business or this is a hobby. So it's very important in creating your wealth building plan and ultimately the legacy plan that tax planning is a very important aspect of that. It's not just April 15th, you get your shoebox and give it to your CPA and they run a bunch of numbers and tell you, oh, you have a refund. No, that's not how tax planning works. With tax planning, you're looking at stuff ahead of time. You're looking at deductions, you're looking at your tax return, keeping legacy planning in mind. Because if you have the legacy planning in mind, that means for every tax dollar that you save, that dollar that is made available for your legacy planning. So it's very important in our discussions that you take a look at the way you're preparing your taxes. As a CPA, I've seen a lot of people who are only concerned about, I don't want to owe Uncle Sam. I don't want to pay IRS more than I need to pay them. It's more than just that. We want to save taxes that accelerate our wealth. So we want to look at things like tax-free compounded, meaning that you're able to have your earnings only accumulate on principal, but your earnings are tax-free. You don't pay tax on those. And you can start now based on the entity structure that you have, based on the deductions that are available to you as a small business owner or real estate investor. You are able to compound your income because for every dollar of taxes that you save and that you invest, and you're able to invest at a 20-30% return. By the way, that is possible now with everything that's going on in the real estate market. Most of the clients that I have who are rehabbers that are buying, fixing and flipping properties are generating 30-40% return on their investment. So that money that you would have paid to Uncle Sam, if you know how to properly plan for your taxes, you can save that money and invest it, and it compounds for you. So this is one advantage of definitely being a real estate investor, but we need to take it a step further, that after you've accumulated that money, that you invest it properly to give you the kind of return that you need. The other aspect that we look at when we talk about tax planning and preparation is entity structuring. This is very important. I cannot overemphasize how important it is that you select the right entity structure. Selecting the right entity structure means that you take into account the asset protection part of entity structuring, the tax aspect of entity structuring, and the ease of compliance when it comes to entity structuring. And I'll give you a very brief example. I definitely cannot cover everything on this call, but I'll give you a brief example of how an entity structure can make a difference in your tax planning. If you're a small business owner and you get 1099s, let's say you made $30,000 for the year, or you're a real estate investor and you purchased a property, rehabbed and sold it, and made a $30,000 profit. Oh, by the way, you did it in a single member LLC, or you're a small business owner and you also did it in a single member LLC. Well, as a single member LLC, you are only filing a Schedule C. You are not filing any other tax form because as a single member LLC, that's what you get to file. Well, by filing a Schedule C, that's where you pay the most amount of self-employment tax. because the bottom line income on the Schedule C is taxed at 15.3%. For 2011, it was 13.3%, but for 2012 and all the other years, it's 15.3%. That's because you set up your entity as a single member LLC. However, let's look at another entity structure. Let's say the small business owner or real estate investor, same $30,000, but set up a multi-member LLC or set up an LLC that is taxed as an S corp. With this now, you have the flexibility of creating a hybrid structure where you pay yourself a salary. That salary is only going to be subject to self-employment tax. The rest of the income, you pay regular taxes on it, but you will not pay self-employment tax. So in this example, let's say you pay yourself a salary of $10,000. You only pay self-employment tax on that $10,000 because your salary is subject to self-employment tax. The other $20,000 out of the $30,000 is regular income to you because you're an S corp or you filed as a multi-member hybrid structure LLC. You will not pay that 15.3% on that aspect of your income. So entity structure is very, very important because if you do it right, you can save yourself on taxes, and then you have more money that's available for you to create your legacy plan. So it's very important that as a real estate investor, as a small business owner, that you are aware that your entity structure is very, very important. That's why we have it integrated in the services that we offer. Most people think that, you can only form a comprehensive LLC by being part of, working with a lawyer, and they're charging you thousands and thousands of dollars. No, you can work with a CPA such as myself and get your entity structure, and you don't have to pay nearly $2,000 to get it set up. And with that, you start getting the benefits. One of the jokes I've often asked out there is how many people have gone through any kind of legal liability or lawsuit, and how many people have paid taxes? Do you know that you're 100% more likely to pay taxes than you are to go through a lawsuit? And if you are likely to pay taxes and go through a lawsuit, shouldn't you be worried more about your taxes when you're thinking about entity structuring rather than worried about the asset protection? And I'm not saying that asset protection is not important. We include all three. But often I've met people who worry so much about asset protection when you're talking about entity structuring and not necessarily worried about the tax reduction aspect of it. Another aspect that we look at when we talk about tax planning and preparation is avoid the IRS. Avoiding the IRS means that you need to audit-proof your return. It's possible that you're able to get a deduction. It's possible that you're able to bypass the passive activity loss rule. But the way that you prepare it on your return makes all of the difference. If the IRS will audit you, and yes, you can prove that you're entitled to the deduction, why do you want to waste all that time going through an IRS audit? So two of the things that we recommend is file an extension. And I'm not just recommending file an extension just because of IRS audits. Also, it helps you. To be very honest, a lot of CPAs and accountants may not tell you this, but the last 2-3 weeks of tax season, which is, starting the last week of March through April, is very busy because everybody wants to get their returns done at that time. Now, if you file an extension, not only are you audit-proof in your return, but you're also giving your CPA and your accountant enough time to look at your return and come up with strategies to save you on taxes. So the question is, if you would have your CPA spend 3-4 hours on your tax return after tax season, or just 30 minutes during tax season, which one would you rather have? So there's two reasons to file extensions. One, to audit-proof your return. Two, to enable your CPA accountant find more deductions because then they can spend more time on your return. And I've heard people say, I don't want to file late because I want to get my refund. As a real estate investor, as a small business owner, you really should not be getting a refund. If you're getting a refund, what that means is that you have lent the IRS, you've lent Uncle Sam some money interest-free. That's an interest-free loan. You could adjust your withholding during the year so that you get more of that money. Like we said, keep more of your money this tax season. Adjust your withholding so that you're able to get more of your money in your paycheck. And you can use that for investment before tax time comes around. So really, at the end of the day, every business owner, every investor on this line tonight, really you should be filing extension. And if you're getting refunds, adjust your withholding so that you stop getting refunds and use that money, put that money to better use during the year rather than lending it to Uncle Sam interest-free. Another way that you can audit-proof your return is by including written explanations and tax law citations for items that could raise a red flag. For example, if you have entertainment deduction or loss of travel, make sure you put the IRS regulations. We call it the IRS regs for why you're taking the deduction, because it helps the IRS to know that you know what you're doing, or your CPA knows what they're doing, and this is the regulation that they're using to take those deductions. Another aspect that we want to look at when we're talking about tax planning and preparation is really the issue of payroll taxes. This is very important, especially if you have an employee or you are an employee. In this case, if you're an S Corp or you're a multi-member LLC that has to pay yourself a salary, the IRS is looking very closely at the Form 941s and the 1099s and W-2s to make sure that you are doing everything right on your payroll withholding. I cannot overemphasize how important this is, especially in my recommendation when you think about your entity structure, moving to an S Corp or a hybrid multi-member LLC. With that, you're going to have to start dealing with payroll. Is it possible to do that? Yes, but you want to make sure that you have the right amount of withholding and that you are working with the right competent payroll service company to make sure that all your filings are accurate and up to date. Now, this is just a warning that if you're being audited, you're going to be asked to open up all your records for examination. So don't wait to get the dreaded audit letter. Get organized now. Do an internal audit to make sure that you have everything that you need if an audit does come up. Now, another aspect of tax planning and preparation is retirement planning. Retirement planning goes right along with legacy planning. Every business owner, every real estate investor should be planning for retirement. They're very powerful tools to minimize your taxes. Did you know that if you set up a solo 401k or a simple IRA or SEP IRA, that you could contribute up to $49,000 of your earned income towards that, and it's tax-free? Did you also know that with a solo 401k plan, that you are able to invest that money back into your business or into real estate and be able to generate more income? There's no reason why everybody on this line tonight should not have a solo 401k plan, some kind of retirement plan that is tax-free. This is the IRS giving you the opportunity to build a legacy by transferring some of your money into a retirement plan, and you're not having to pay taxes on it. So these are very important things that we want you to keep in mind and be aware of, that there are so many things that you can do as an investor, as a small business owner, to save on your taxes. And setting up the solo 401k and the retirement plan is not as difficult. It really isn't complicated. Sometimes you can get it done in 24 to 48 hours. You have it set up. Now, so for a solo 401k, it needs to be set up before December 31st. But if you're doing a SEP IRA or any other IRA account, you can do it anytime and then contribute to it up to your tax filing time. Another reason why you should file an extension. Let's look at it this way. If you decide that you wanted to contribute to your 2011 tax return and you filed an extension, do you realize that by filing an extension, you have till October to make that contribution to your retirement plan, and it still counts for the 2011 tax year? So that possibly means that you could be using money that you generate in 2012 to contribute to your retirement plan, but you get a deduction for it in the 2011 tax return. Very powerful tax savings tool, especially if you file extensions. That means something that you would have done in 4 months, you get to do it in 10 months and still get a deduction for the year. So it's very important, like we said, that you think about all aspects of wealth building. Another very important aspect is record keeping. It's very important that you have a good record keeping system for your taxes. There's a lot of transactions if you're an investor, when you're rehabbing property, having to keep up with all the contractors, the utility bills. If you're a business owner, having to pay rent, salaries, all of that. There's so many deductions, but if you get into the habit of record keeping and do it every day of the week, every week or every month, you're going to be able to find deductions that you otherwise would have missed if you're waiting until the end of the year to just give your preparer, your bookkeeper a shoebox. And one of the ways that I've told people that you can do record keeping so that it's very easy and very simple to do is only use only use your check card or write a check. Never use cash. If you do that, or use a credit card, if you do that, you would always just need to use your bank statements or your credit card statements to do your bookkeeping. You're not having to fish for a receipt here or a receipt there, because everything is kept in your bank statement because you used a check card or you wrote a check or you used a credit card. So it's very important that you keep your records. Right now, I have about 2 clients that are going through audits. What is going to help them on this audit? They came to me, they called me last year. Of course, they waited until the last minute. And not only that, whoever prepared their return, the accountant that they used to prepare their return messed up their return really badly. In one case, I have a client that sold a property, and the CPA did not even calculate the loss on the sale of property. $40,000 loss that was not calculated. But because I was able to help this client reconstruct their record keeping, rather than the IRS coming after them saying that they're owing, we're actually expecting that they're going to get a refund. And I'm hoping that by next month or in the next 2 months, I'm going to come back to the webinar and say, you know what, these 2 clients actually got their refund, and it's because of good record keeping. Because these people kept good records, I was able to go back and reconstruct those tax years that are on the IRS audit, and we're fighting the audit. We went to appeals, and I'm showing the IRS examiner that these clients are actually entitled to refunds. There's no reason why they should be audited. But that's because there is good record keeping. So I cannot overemphasize how important it is to make sure that you have good record keeping. Now, the other thing that I want us to look at is what we call year-end tax planning. I tell a lot of my clients that tax preparation for the April 15th tax return is not tax planning. It is just tax compliance. Because April 15th is your tax filing deadline, but your tax savings deadline is actually December 31st. So one of the ways to make sure that you can reduce your taxes is you really should not be looking at your taxes right now for the 2011 tax year to figure out what happened. A lot of my clients who were part of my wealth building plan, we took a look at their return November, December of last year to see what is going on. Because some of the best tax reduction moves that you could make can be done mid-November or early December. And that's why you're able to do tax planning. And getting a head start makes you a lot happier in April. We have about 3 clients that we're able to set up solo 401ks for, and they're able to make the maximum contribution. Can you imagine what impact that's going to have on their tax return? What if they waited and they came to me now? It's too late to set up a solo 401k. Except, of course, you do a SEP IRA, another type of IRA, but we want to have the solo 401k because of the benefits for small business owners and real estate investors. So it's very important that you do year-end tax planning. As events occur, as things occur during the year, you want to sit with your accountant and be going through what the tax consequences are. Don't wait until the end of the year, or don't wait until tax time, and that's when your CPA is first hearing about a property that you sold and you made $40,000 and now you don't want to pay the taxes. And sometimes if you do year-end tax planning, it also helps to keep you away from trouble. I can't tell you how many people are trying to cut corners and cheat the IRS and, do things and evade taxes. The wealth building CPA, we don't subscribe to tax evasion because we simply believe that there's so many loopholes out there to help you save on your taxes legally that you necessarily do not need to look to tax evasion to pay less in taxes. And don't forget, when you join our wealth building program, we have an initial consultation to determine which of these stages that you need to implement first. And then we work with you to come up with a personalized wealth building program. I encourage everyone, if you've never had a consultation with me, feel free to give us a call and get your consultation done, because we're here to help you generate income. We're here to help you generate wealth. And one of the biggest ways that we can help you generate wealth is by putting you through an ultimate wealth building plan. Because after having the ultimate wealth building plan, guess what? It enables you to move in to having a legacy plan. And that's ultimately the goal. You begin with the end in mind. And so right now, we're done with our presentation. I'm going to put up the contact information for Marcella for the Legacy Builder Group. Please feel free to give Marcella a call. That's their phone number, 1-866-664-6711 extension 23, or you can go to their website at www.lbgfinancial.com, or you can send an email to info@lbgfinancial.com. So right now, I'm going to open it up for questions. Simply type in the question. If you want us to contact you, or if you have any other questions, please go ahead and ask at this time by simply typing it into the box. Marcella, are you ready for the questions?
Yes. I am there.
Okay. One question here says, have you heard of creating insurance policies that are built upon the same self-directed investment concept in IRA? So he's saying that he knows that this is not necessarily a topic for the webinar, but he just thought he'll ask.
Yes, I'm familiar with some of the, some of maximum funded life insurances, or there are different forms of insurances which are permanent insurance where you are able to build up cash value and use it for various purposes that are not regulated. But, again, it's not investment, but it does have the cash liquidity to be able to use it as a living benefit, and to and it is one of the tools we use in the legacy planning process if it meets the needs of the client.
Okay, thank you. Yeah, that's very important, because I think, like you said before, insurance is also a very important aspect of legacy building. And if we're able to do it in a self-directed IRA, especially for small business owners and real estate investors, I can really see a great value added. And one of the things that we do with our clients, as I'm answering this question, please just type in your question. If you have any question, please just type it in the question box, and we will get to your questions shortly. One of the things that we do in working with the Legacy Builder Group is, as a small business owner and as a real estate investor, your investment is considered an alternative investment. Most financial planners don't want to talk to you because they feel like you're going into risky investment. But I'm a real estate investor myself, and I know that there's money to be made, and currently being made through real estate and by starting your own business. So we are not afraid of alternative investments. But one of the things that we do is to say, let us look at this alternative investment, which is real estate, and which is your small business. And how do we set up a legacy plan that takes into account the investment that's coming from there, whether it be the risk or the amount of money that you're putting in? And we take that into account. Most of the time when you go to other financial planners, they would not even want to look at your self-directed IRA or look at what you're doing in real estate or a small business. They want to put you into traditional, mutual funds and bonds and stocks and all that. No, we believe that there is money to be made, in real estate, and you're a very savvy investor, and with right training and opportunities, you should be able to generate as much income as you can generate. So what we do is we have that integrated. We take a look at what your goals are in real estate or what your goals are in a small business, and we integrate that into the financial plan. Marcella, do you want to comment on that?
Definitely, and that is a very important part of it. because, again, you have to look at all the areas. If real estate is what you want to do and you're being educated, you're being properly coached, you're working with individuals like Adair who are guiding you and looking at all the elements, and then you're working with us to create the legacy plan, that covers all the areas. But as Adair mentioned, that, yes, most individuals, most financial planners do not want to deal with that. And I think it's, unfortunately, it doesn't work with what you are trying to accomplish, because ultimately what matters at the end of the day is the legacy that you're building. And if real estate is an important part of your legacy, and that needs to be integrated in your entire plan.
Thank you. Now, one of the questions here is, do you have any experience working with foreign investors? And this person is in Australia. Absolutely. I have quite a number of international clients. By the way, for those of you that are in the United States, if you will not invest in your own backyard, we have international investors coming to the United States, and there's an influx of them. I can't tell you how many clients that I've picked up that are Australian investors over the last couple of months that see the value and what is going on right now in the real estate market in the United States and taking advantage of it. But, back to the question, yes, we work with international investors and Australians and help you set up the right entity structure here that's also going to be relevant, with what you have in Australia. And, we tell you what all your compliance requirements are, what kind of taxes that you need to file, both here and abroad, and we would walk you through it to help make sure that all those taxes are filed. Now, you might have to pay a little bit more taxes more than the regular United States citizen, but we work with you, and you have that information ahead of time. I had somebody that left the country, I think about a month ago, and simply all they did was put us in touch with their property manager, and their property manager is going to send us the financial statements, and we're going to get the taxes done, get every other legal filings that need to be done to keep the LLC in good standing, and we'll just email them and let them know we're done. So, we work with foreign investors all of the time. So feel free to contact me. We have our phone number in the box, our email, and our website, and we can talk to you directly. Okay. Trying to see if we have any other questions. Marcella, feel free to chip in if you have anything. I'm trying to look through the questions here. The box is kind of small.
Just to touch on a couple things that you mentioned before there, again, going through the process and the wealth building package and the wealth building plan, that each step is crucial and vital, and taking it step by step is very important. With some of the things that we talked about, the legacy planning part, it all ties in together. But it is a step-by-step process that begins now and continues on, and it doesn't really end, as I mentioned before. So once you really start getting involved with the Wealth Building CPA, we'll start that process, again, step by step, not overwhelming you with too much information, but making it a very pleasant experience. And, again, at the end, providing you with the peace of mind that you need to know that you have everything in place.
Thank you, Marcella. As we wait for the questions to come in, all right, so there's one here that says, is creating a living trust and an inheritance trust to start building a legacy? Let me make sure I'm reading this right. Is creating a living trust and inheritance trust a start to building a legacy plan?
Building a trust, inheritance trust, or those type of trusts are a part of the estate planning process, which is a part of the legacy plan. So, yes, it is. But when you're going through that process, as long as you're carefully evaluating all that you need, if someone is just saying, oh, you need to set up this type of trust without talking to someone or working with someone and making sure that your entire situation is being evaluated, that's where you need to begin. But depending on your situation, yes, having a trust in place, and there are various types of trusts, and especially if you have a business, you're an real estate investor, there are several different types of trusts that will fit your needs. So having a trust in place is very important when you have family, when you have children involved. But knowing what the type you need is crucial, and that's only done by working with an individual like myself and having the right, or Wealth Builder CPA, and having the right individuals on your wealth building team.
Yeah, and it's very important, Joelle. One of the questions, one of the points that I wanted to make is that it's usually a facts and circumstances case, meaning that we need to take a look at what's going on, and that's why we have you in starting out the wealth building plan, fill out a financial needs analysis questionnaire. For some people, yes, starting out with the trust may be the thing to do. For other people, it may just be getting caught up on their taxes and filing their taxes right. For other people, is having an entity structure and getting their business or getting their real estate property into an entity structure that gives them protection. So there's so many aspects of creating the legacy plan that, yes, for some people, the living trust is a start. For some people, that's not merely even scratching the surface of what they need to start the legacy plan. And that's why we encourage you to fill out the financial needs analysis questionnaire, because that's the first start in determining whether that's enough or whether you need to do more. I have another question asking me to explain the time of year that you should start the solo 401k plan in order for it to count for 2011. Well, it's too late for the 2011 tax year. If you're going to take advantage of a solo 401k plan, you need to have the solo 401k set up by December 31st of that year. So you should have set up a solo 401k by December 31st of 2011 for it to count on the 2011 tax return. If you're going to set it up for this year, you need to set it up by December of 2012 for it to count for the 2012 tax return. Now, there's other retirement plans like the SEP IRA, the Simple IRA, that don't have that requirement. But one of the reasons why we usually push for the solos over and above the SEP is, one, the amount of money that you can borrow for the solo 401k, especially if you're a real estate investor, and not having to pay what is called unrelated business taxable income. A lot of investors don't realize that if you own real estate in a retirement plan and it is debt financed, the IRS wants you to pay taxes on the portion of the income that's related to the debt finance. But if you have a solo 401k, you don't have that requirement. So it's very important that we understand that there's so many aspects of the retirement plan, and that's why we work with you on an individual basis to tell you, what it is that you need to do. So we usually advocate the solo 401k over and above the SEP. But in your situation, if we determine that you really need to set up a retirement account that's going to take effect for 2011, one of the things that we look at is to set up maybe the SEP IRA or the Simple IRA for the 2011 tax year, and then roll that over into the solo 401k for the 2012. So that way you still take advantage of it for the 2011 tax year, and then roll it over into a solo 401k when you're ready to start investing. We're getting ready to wind down here, so I'll keep asking questions. Just asking, can I put up the web address for the financial needs analysis link on wealthbuildingcpa.com? Absolutely, Mike. Thank you for reminding me. We will do that. But usually if you send us an email and ask for the financial needs analysis questionnaire, we can get that to you. But I will, I'll talk to my webmaster and see if they can have that up. And Marcella, I think we're able to do that, right? We're able to have that link up on the website where they can just go and fill in the information. They don't just have to download it as a PDF, right?
Correct. Yep, they can hit the link, complete it online, and they don't have to download it as a PDF at all.
Now, what are some of the questions that are on that financial needs analysis questionnaire?
Some of the questions, really getting involved with what's going on with you, need to find out where you are financially where you are currently. Some of the things we'll need to find out are what are the current assets you have, what are the things you're working with, even down to how many children do you have? Are you planning for retirement? When are you planning for retirement? When are you planning for college? And then what are you doing with your business? You currently have a real estate business? Or do you already have it structured, a properly structured company? You have a bank account set up for that company. So we're really going to get into details as to where you are working towards going, and then we work with you to make sure everything is relevant, everything is current, everything is accurate. So when we're creating that plan for you, that we're just not basing it off of hypotheticals. We're dealing with reality, we're dealing with real numbers, and everything that we create for you will be accurate.
All right. Thank you very much. If we don't have any questions, we will go ahead and start winding this down. Again, thank you for being on the webinar tonight. It's been very informative, and our goal is to help you build wealth. Again, you have our contact information up there. If you want to reach us, is 1-888-502-3767. Or you can go to our website at wealthbuildingcpa.com, or you can send us an email at info@wealthbuildingcpa.com. And Marcella, go ahead and give out your information.
Sure. And you can reach me. Website is lbgfinancial.com, or you can email us at info@lbgfinancial.com. And phone number is 866-664-6711, extension 23.
Okay. Now, thank you, everyone, and have a great evening, and we look forward to talking with you. We have these webinars every month, so we're going to be here same time next month, usually I think it's the third Tuesdays of every month at 7 p.m. And also we try to do a review and a summary in about 2 weeks. So in about 2 weeks, we're also going to send you out a summary if you were on the call, because we want you to keep in full view everything that we've talked about this evening. Okay. All right. If there's nothing else, have a great evening, and thank you, Marcella, for being on the call tonight. I really appreciate it, and I love working with you guys.
Thank you. Love working with you, too. Thank you for having me. Thank you, everyone, for joining us on the call tonight.
All right. No problem. Good night.
Okay. Good night.